I think I want to thank you for that question. I just want to find out from the room, how many people know about KMRC? Raise your hands. How many people live in a home? Raise your hand. Everyone does, right? Very nice. So stick in there. We'll tell you about why you need to know a little more about KMRC. But just right into the question, I think the most significant challenges we have or we face is the knowledge gap. You know, we are all literate, I think, in this room. But are we all financially literate? I'm not sure about that. So financial literacy is not just about, reading and writing or just getting some piece of information. It's about your security. It's about focus on potentially a form of investment. It's about planning. And I like the discussion about Chora plan. Because when you Chora plan, if you do it literally, the most common plans we Chora are what? Home plans, right?
So Ms. Oltete is talking about there's a knowledge gap in the market. Samson, on the extreme end, in your own assessment, what are some of the challenges we face with financial literacy?
Thank you very much, Julian. My name is Samson Oweru from Kenya Society for the Blind, and our organization is charitable in so far as it is responsible for assisting Kenyans who are blind and those who are on the risk of going blind so that they don't go blind. Just to delve into the discussion, within the disability sector, persons with visual impairment tend to be left out in access to financial services and financial products because their lack of the sense of sight is most of the time misinterpreted to mean that these people maybe cannot handle their own financial responsibilities, and therefore they are not looked at in a manner that can support them to also benefit from the good products and good plans that we have and that we are discussing about here. Secondly, is access to technology, because when you are blind, it's only technology that can enable you access financial services as well as other many services. And most of the times the platform and the technology products that we have even from our banks do not or are not produced or are not manufactured with the interest of persons who have visual disabilities in mind. And this becomes a very great challenge. And thirdly is the cost of these technological devices that a person with visual disability may need to access these financial services. Thank you very much.
Thank you very much, Samson, giving us two very critical perspectives there around access to technology and, more importantly, the cost associated with it. Teresa, give us an IRA perspective in terms of the key challenges you face around financial literacy.
Thank you, Julian. Good morning, everyone. One of the challenges that we face on issues of financial literacy is one, the programs are highly fragmented. By that I mean, if you look at the financial sector, the Insurance Regulatory Authority does programs specifically on insurance literacy. If it is banking, they focus on banking. If it is Retirement Benefits Authority, they focus on pensions. So as you can see, when IRA speaks about insurance literacy, that's just one of the perspectives of financial literacy. So as you can see, the approach is not holistic, and that is why maybe we have not been able to achieve so much in terms of financial literacy. The other reason could be financial literacy programs have been left to institutions that are regulated and other partners within that space. Yet, there is a very big part of the population that is served by providers of financial services that are not regulated. So as you can see, the financial literacy programs are skewed, and they are normally offered by a certain sector of the service providers, and that is those who are regulated, those who are supervised, and the partners within that space. Thank you.
So we have multiple fragmented interventions, and then it seems to be a perception issue where it is deemed to be a preserve of regulated institutions, yet there are many players in the unregulated space who are very critical in the conversation. Let's hear from the Competition Authority on the challenges faced.
Yes, thank you for that question. Just brief about the Competition Authority of Kenya is that it exists to regulate competition and consumer protection in the Kenyan economy. You may be aware that we approve all mergers and acquisitions in the Kenyan economy. We investigate restrictive trade practices. And obviously we have a consumer protection mandate where we investigate all consumer complaints and undertake interventions. Now, the challenges we have seen in the financial services sector or related to financial literacy is reflected in the number of complaints or the nature of complaints that the authority receives. One of the major complaints that we receive is, and we have seen, there's a lack of understanding in the terms and conditions of some of these financial services products that are given to our consumers. There's a lack of understanding in the fees and charges that are charged. So you find a lot of complaints emanating regarding that aspect. We see the unavailability or I would say of redress mechanisms that should be given by some of these financial service providers. I can tell you that in the last financial year, 2022-2023, and we are seeing indications this financial year. Last financial year, over 20% of the complaints that the authority received emanated from the financial services sector. Our projections are already seeing that it would go to about 40 or so % of the total number of complaints that we receive. So it means that there's a big challenge out here that we need to address. Thank you.
Huge challenge there when it comes to the financial services sector. And let me come back now to the conversation we've had around, we have multiple interventions which are fragmented. Teresa, what do you see as the path to collaborative efforts to address this issue?
Thank you, Julian. One of the strategies that the authority has adopted is a collaboration and partnerships with other sector regulators and other partners, government ministries and departments. And with that, there's possibility to increase the reach and also improve on the impact to give a more holistic, more coordinated and collaborative approach to issues of financial literacy.
Okay. And Mr. Oltetia now, how are you integrating at the KMRC level the conversation around financial literacy in your interventions?
Thank you, Julian. Now, we have an inherent partnership with the financial institutions, banks, and SACCOs. Because the way KMRC works is a wholesale financial institution. It provides funding to banks, provides funding to SACCOs, who, as part of their normal business, provide home loans or issue mortgages. Now, that partnership is built on a couple of things. The fact that financial banks particularly do retail, and therefore they have collaboration with people, or they reach out to an NG for that matter. The SACCOs do equally the same thing, and therefore the liquidity they receive from KMRC is mainly in affordable. We actually say our value proposition is providing affordable financing. Affordable in this way. Number one, we have a longer tenor of financing. I know, and we have a study that we did last year that shows a majority of Kenyans actually don't even like long-term loans. Incidentally, you prefer short-term. Now, the challenge with a short-term loan or mortgage for that matter is it's very expensive and only a few people can be able to afford. And the reason why we extended it long is because the two critical things that affect a mortgage or even any loan for that matter is the duration in which you're going to repay being the most significant. And the other one is actually interest, the interest rate. And therefore, we are providing single-digit interest rates, and that's extended to the financial institutions. But the more fundamental thing we do is actually provide them in fixed rate terms. Over 88% of loans in this country are on variable terms. And you know what happens to that? Should market shift, then you have a problem because you may go into defaults and things like that. And that's why we are fixing the rate. And that's the three components that actually make a mortgage accessible. Now, we have rolled out, I think over the last 3 years, we have been having capacity building arrangements that we do on an annual basis. The capacity building, and this is the partnership I'm just trying to describe, the capacity building is mainly on the financial institutions, the people who normally originate those mortgages. The fact that they need to understand how to make it a lot more efficient, how essentially to serve their customers better, how to understand, or they need to understand the eligibility criteria that are there, so that when they reach out to the people, certainly they help them to originate those mortgages. The most fundamental thing that KMRC does is actually to help people to own homes, or a majority of people to own homes. So because we understand a home is not, or an investment in a home is not a mere transaction. It's a lifetime commitment, and you need that decent home. And that's why we have that partnership. So we are strengthening that partnership, not just to the institutions that we work with, because KMRC works with designated financial institution or participating financial institution, as we call them. But essentially, we are broadening that up so that we actually now start refinancing, including non-participating financial institutions. The participating financial institution I'm talking about here are institutions that are shareholders of KMRC. That's the banks that are shareholders, the SACCOs that are shareholders. But we thought it will be necessary to extend the scope of lending to include non-shareholders. That way, we can cover a wider number of Kenyans to be able to access homes. So we built that partnership, and we actually also have been driving a lot of education to the public, even as we interact with the financial institutions. We go out essentially to educate the wider public on a mortgage. It's actually one of the most misunderstood issues. People just don't like mortgages, and thanks to Chora, right? So we had banks actually spoiling the name of a mortgage. And that's why we're coming together to work with the banks to make that better, to make it sound better. And that's why we're calling them home loans, and we expect a lot more people to be able to be receptive on that.
My friend Joe, this is totally off script, and allow me to prod you on this question. So you say majority of Kenyans peculiarly prefer short-term loans. I did a study not too far back, and one of the things which emerged from that study was, one, because we tend to work in contractual terms, you want to take a loan which you'll service within the term of the contract you're employed in. So you're not sure you'll be there for 10 years, you're sure you'll be there for 5 years. Don't you think there's an element of duration risk being factored in that perception?
There's certainly a duration risk. But actually, when you look at the market right now, a majority of people or institutions are shifting people into contractual terms, right? So we will soon have less of, they call them fixed and permanent, or permanent and pensionable. But it's based on the risk, it's based on the credibility, it's based on your credit worthiness. A majority of banks are actually lending people who are on contract basis, beyond their contracts, because they certainly assess the ability for you to repay. Now, we are also now saying, you know what, we should already be going into lending to people who don't necessarily have a salary. most of the lending that we do, and this is the risk-averse nature of our financial institutions, you know, when you walk in there, the first thing they ask you is what?
You have
A pay slip. Now, that is a terrible limitation, because if you don't have a pay slip, then we don't have a relationship, which is very unfair. So what mechanism can we use to lend to those who do not necessarily have a pay slip, but they have an income nonetheless? The only thing is, a demonstration of that income is what we need to have. Like, for example, can we develop digital assessment arrangements for you to determine that a taxi driver, that a kiosk owner, who actually have income, significant income for that matter, can you determine the regularity or the irregularity of that income or that income stream for you to be able to lend to that? But we're also adding into that, and this is why we're coming in with a bit more of market development. We're saying that in future, very, very soon, and this is why we develop what we call a risk-sharing arrangement, and this is a partial mortgage guarantee arrangement. Now, this is essentially meant to create a relationship between financial institutions and those people who do not have a regular income, or those who do not necessarily have a pay slip for that matter. But certainly, when, just going back to his question, there is always, a term issue when you're looking at a mortgage. In fact, when you look at it long term, you end up paying a lot more. But that's besides the issue. The most important thing is, will you be able to enter into that transaction now? And you don't want to wait. You always need to enter into that transaction now, because you need a home now. And you know what? There is never a time when people will never need a home.
Thank you, Joe. I know we could go on that tangent and have another panel discussion. But let me come back to Samson right here. Samson, you mentioned some critical gaps in the market, and my question here is, how do you see inclusivity around financial literacy evolving? Are we making strides forward? Are we stagnating? Are we getting worse?
Thank you very much. From where I sit, I think we are moving at a snail pace, or we are just stagnant without knowing how to tackle the issues of persons with disabilities. From where I sit also, I see the financial literacy that you're talking about would really bring much more impact if we started with awareness creation and sensitization of those of us who are within the financial institutions, in the fintech, the leaders in our banks, the CBK, and the policymakers around the whole finance aspects on issues that really affect persons with disabilities, so that from that we can start trickling down and addressing critical challenges that are really making persons with disabilities not to be included in the financial sector. You will find that currently the global trends have shown that countries that are first world and that have put a lot of efforts in inclusion have also had a lot of economic success and economic growth. Currently in Kenya, persons with disabilities are doing well in education, they are doing well in other social spaces, and this means that they also are exposed to finances and money, and they need a lot of literacy for them also to know which are the best products in terms of savings, in terms of investment, and in terms of even having a plan for building homes and so on. But mostly, when we are looked at persons with disabilities and not persons who have abilities and have our own finances, and therefore institutions, the banks and the insurance sector can tap into the resources that we have, however small we may think they are, because people with disabilities, if embraced and if included when we are developing these products, they could really also ensure that we have a thriving economy that takes into account the needs of each and every person. Lastly, for us to be truly inclusive, we need to embrace the principles of universal design. And these principles are very simple to adapt and to have in our working, so that they ensure that we don't think of persons with disabilities after we've developed a product or we've come up with a program and realized that we didn't include them, and therefore we are leaving them behind. Number one, everything that we are doing, we should ensure that it is perceivable. That if it is something that can be used by someone who has all the senses, the sense of sight, the sense of hearing, the sense of touch, that of smell and of feeling, there are those who may lack one or two of these senses. Then how will this product accommodate them? And it is really possible for the product to accommodate them. There are the WC3 Universal Accessibility Guidelines that can sort these out. The second principle is understandable. These products or these platforms should really be understandable, including apps. Nowadays, we are using a lot of mobile apps and internet platform. If they are perceivable, then they are understandable in the sense that a person with any kind of disability understands how this app works. It is chronologically in order for them to know that these buttons are labeled from this to this. And so for someone like me who depends on a speech, I can listen to my phone and know that I'm moving from this button to this, even if I'm doing my M-Pesa. I'm putting my PIN and I've put my black screen so that no one can see. Then they should be operable in the sense that persons who have any type of disability can operate them easily, and they should be robust to handle these needs and for them to ensure that there is sustainability for persons with disabilities to utilize them properly. Thank you.
Thank you. Speaking to the issues of universal design and quite eloquently there. Thank you for that. Before I get into closing remarks, let me ask Boniface a question here. Speak to us about the intersection between consumer protection and financial literacy.
Yes, so the intersection between consumer protection and financial literacy comes in terms of education, in terms of information. If you look at Article 46 of the Constitution of Kenya on consumer rights, consumers have a right to information necessary for them to gain full benefit from goods and services. So there lies the intersection. And when you talk about financial consumer protection, then it calls for information then to be given to these consumers so that they can gain full benefit from the goods and services. But most importantly is for the undertakings, the companies, the financial sector, the financial services providers to also recognize this particular element. The authority, we've taken financial literacy very, very seriously and incorporated it in various aspects. I indicated earlier on that we investigate individual consumer complaints, and in that aspect, we take that opportunity to educate consumers, because not all complaints that we receive means that the company was had violated the act, the Competition Act. So at that point, we take the opportunity to educate the consumer. But where we have made or taken a decision against a particular company, either through penalization, we give them the opportunity to create awareness to that particular consumer, educate, and also their consumers. We also, in the commitment decisions that we sign with those institutions, we come in to create awareness to their staff, because a major thing we have seen, or the disconnect we have seen, is in terms of some of the financial services providers, the agents, and how they represent the information to consumers. Because in their quest to sell the product and to earn the commissions, they represent the products, and you find consumers then at the sign down there at the bottom of the agreement that they have agreed to those terms and conditions. And later on, they come to realize that what they had signed is not what they had sort of perceived. And I think we are all, I would say, culprits or victims of signing at the bottom of an agreement, because even if you look at online transactions, sometimes either we don't tend to read, which I know consumers have an obligation on that, but in terms of financial services, there's an aspect of consumers not being aware because terms and conditions could be either legalistic, or the font could be too small, or there could be some sort of unconscionable way in which that was presented. There is a vulnerability of these consumers. Remember, they have come and they have a certain financial need, and then the vulnerability comes in. And I think there's an obligation not just to consumers to be able to understand terms and conditions, but the obligation to us as the providers of these products to sit down to those consumers and explain to them. And most importantly, I see the aspect of coming up with financial literacy programs as very, very important. We have seen concerted effort by digital lenders to come up with financial literacy programs within their apps. So that is a good thing. We are seeing banks and other financial services providers coming up in their websites with tools and opportunities and ways to sort of create awareness to consumers regarding their financial literacy. For the authority, we've gone further ahead. We really take the aspect of financial inclusion and financial health very, very seriously. You see, Dr. Duge talked about financial inclusion as increasing to 84%, while financial health actually declined to about 17.1%. So this is very, very key, and the authority then has gone ahead to partner with the Kenya Institute of Curriculum Development, and right now, under the competency-based curriculum in the junior secondary schools, you'll find consumer protection literacy and material being from at least grade 10. So the authority is now also creating awareness amongst children regarding that. And we have partnered also with KICD and financial sector regulators to integrate financial literacy in schools. So we see financial literacy as very, very important, and that's where I would say consumer protection and financial literacy intersects, and it is something that we need to really put effort in enhancing it. Thank you.
Thanks, Bonnie, for that. I want to get into the closing remarks, and let me start with Teresa. As you give us your closing remarks, how do you address the question of financial literacy in a market where insurance is largely perceived as a non-essential, if I could say?
Thank you. I'm sure most of us or all of us have at least an insurance policy in place, right? Well, some are nodding, others are not sure, but I hope that at least all of us have some form of insurance policy. The Insurance Regulatory Authority has the mandate to regulate, supervise, and promote the development of the insurance industry. And in the pursuit of that mandate, then we conduct a lot of insurance awareness amongst various categories of stakeholders. We also have insurance education programs for consumers to have an understanding of the various insurance products and services available in the market. And we go further to advance that education to the knowledge that a consumer will be able to make the right choices when it comes to issues of what options they have and what are the right products and services for them. And we use various models of doing that. One, we work very closely with the various TV and radio stations for dissemination of consumer insurance information. And we have gone down further and have had that dissemination of insurance information in the local dialects. So we work with various radio stations across our country, Kenya. When it comes to the TV stations, there are those that take care of the needs of those who are visually impaired, those who have hearing challenges. So we also take into consideration that, and we have also translated the materials that you use to Kiswahili just to improve on the understanding of the various insurance products and services. We have insurance information in Braille to take care of those who are visually impaired, and also pictorials, just to improve on the understanding and enhance the appreciation of the various insurance products and services. Boniface talked about consumer vulnerability. So what the authority has done is to standardize the insurance contracts to make them simple and easy to understand, because as it were, most of the people say that they are either complex, the print is very small, they are difficult to understand. So we have made those efforts just to make sure that the insurance contracts are easy to understand, and at least they are standard across all the products that are offered by the insurance companies. So there's a lot that the authority has done, and also we are promoting inclusive insurance just to make sure that the affordable products in the market, the relevant products in the market, so that the unserved, there are products available for the unserved markets, the underserved markets, and that we are able to provide insurance products and services, or insurance solutions for every sector of this economy, whether it is the vulnerable groups, whether it is the youth, the MSMEs, and any other sector of this country. Of course, insurance is looked at as, it's not really a basic requirement, which is which is understood because of course, every person needs to first of all meet their basic needs before they come to think of insurance. And of course, they must also have enough disposable income to make a saving once they have met their basic needs. And you know, insurance is also looked at as a compliance product. You know, you buy that party motor cover just to make sure that you don't get into problems with the police. But in our programs, we convey the message about the importance of insurance and what insurance can do as a risk transfer mechanism, and how it can help every sector of this country in all aspects, including savings, including investments, including security. Some of the insurance if you have a life policy, for example, you can use that policy to take a loan with the insurance company. And of course, it creates a lot of avenues for borrowing. And in this case, I'm not competing with the banks, but insurance companies also offer loans, and you can use your life policy as security. So if we look at it that way, then we may stop looking at insurance as not really a necessity. But I believe with more insurance literacy, financial literacy, and all the collaborative efforts, but by the various partners and the regulators, then we can change that narrative so that we can have a better appreciation of what insurance is all about and what it can do for us. Thank you.
Thank you, Teresa. Some of your closing thoughts?
Thank you. According to the World Health Organization, 17% of the global population are persons with disabilities. Translated to Kenya, there could be over 7 million Kenyans who have one form of disability or another. As you can see, this is a population that cannot be ignored in any way and in whatever sector. And so, in the financial sector, if we really want to go far, let's look at disabilities in the approach of empathy and not sympathy. Sympathy makes us see disability as people who need just to be assisted with charity, and that's the end. But empathy will lead to more thought-driven programs and projects that can really impact them and bring them into whatever sectors that we are, and afford them an opportunity to also participate in the economy. The worst thing about disability, we say it's an open club. Today, you may think you don't have it, and tomorrow you just join this side. And that's when you realize I should have done more to enable persons with disabilities access. Kenya Society for the Blind is a statutory body created by an act of parliament. We are available and accessible to give any support or assistance to any institutions that may like to know how better they can support or they can put their products or services for them to be accessible by persons with disabilities, including even making these products accessible in alternative formats as prescribed by Article 54 of our Constitution, as Teresa said, in Braille and in other languages. For the deaf or hearing impairment in audio-visual, so that they can also access the same information in sign language, because access to information is a very big challenge among persons with disabilities. Otherwise, also persons with disabilities, those who are not economically empowered may also want to have money so that they can use that money in the economy, and so that this country can grow out of the support and the pockets of each and every one of us. Thank you.
Thank you very much, and I should correct that. The name is Samson, not Samuel. Sorry for that. Bonnie, you want to close, give us your closing thoughts?
Yes. First, I'd like to congratulate Kenya Bankers Association for this initiative and bringing together all the stakeholders to rally towards financial literacy. And secondly, is just a call to the stakeholders. One, our regulators, I know for us to be able to look at the gaps in financial literacy and to look for ways to support businesses, financial services providers in enhancing this particular program, but also to other stakeholders is not just to provide literacy and awareness, but to critically look at our products, our systems, our processes to ensure that they are customer-centric and to incorporate literacy aspects in all the products. Thank you.
Thank you, Boniface. Joe?
Thank you. I just want to take the cue from him to recognize the important effort put by KPA to bring all of us together to run this important literacy arrangement. Now, the governor alluded earlier to sustainability, to the effect that we would need to sustain this so that it's not an event. We certainly need a more elaborate arrangement that potentially involve all the financial actors so that we run a more significant campaign, but more importantly, create an arrangement that will be sustainable so that we keep going over. Now, lastly, invest in a home. And don't use cash to invest in a home. The most inefficient way of investing in a home is cash. Use credit to invest in a home, because that way, then you'll be able to build an asset that is sustainable, and essentially then provide your people a decent home. I think if we all come together to run this campaign, we should be able to transform our markets. We should be able to transform our societies and make this country greater. Thank you.
Thank you very much. Let's appreciate this panel for the insights they have given us.